Ladies and gentlemen, welcome to the unnamed show that features the great and powerful Brad Freeman and Evan, the stock market nerd. Ladies and gentlemen,
if you keep saying that long enough, that will become the name. Just so we're all on the same page.
It is. I'm honestly happy with that.
Podcast.
The unnamed podcast, where we talk about the largest tech companies and big movers, what's going on in the markets. And we just sit here in silence. We listen to what Brad has to say, and we try to add things in whenever he's in the Alps or hiking or whatever he's doing that's not following markets. We try to fill in. But aside from that, we're good listeners.
No, give yourself more credit than that. But even on 4th of July or 3rd of July, I guess we're talking about stocks. So can we blame the Canadian for that? You guys have a different date for that. Isn't yours was a couple days ago, right?
Yeah, the first. Yeah. Okay. Which I was still covering U.S. equities and everything. I was live.
Yeah.
But yeah, Brad, how you doing?
I'm good. I'm in northern Michigan. It's 75 degrees outside. I think I'm going to go on a hike after this. And there's not a ton happening this week, but definitely enough to talk about. I mean, Robinhood's event is probably going to be the main topic. So do you guys want to start there?
First of all, how are you? You happy boy?
No, I'm doing well. Obviously, we've talked about Apple in here, and it's having a good week. All-time highs is a fun time. But yeah, I think summation though, this wasn't a bad week to take like a full week off, go on vacation or whatever. We have market closing in an hour here, 55 minutes. We can look through some of how single stocks are moving here, but there wasn't that much that happened here. We're talking about some interesting events, and there maybe was one or two points that were in there. But yeah, I really did think the Robinhood event was quite meaningful, and it went to my mind where I haven't really dug in deep enough was what is the landscape of the brokerage market in Europe, and is that disruptable for Robinhood to come in here? And there's a lot of questions of I feel like there's been a lot more questions around the private company tokens. I didn't care as much about that one, because I feel like there's a lot of steps to go in and do that. The ultimate thing I'm excited about is bringing it to the US. And I don't know if that got closer. I think we're just seeing what it could be, but we kind of knew that. What excited me was the possible TAM expansion of entering Europe in a meaningful way, and what they were able to do in the US with, democratizing the brokerage space, how it changed the industry and then unlocked a whole retail space. Like we're talking about retail being 30%. In the US is kind of that area of speculation, which I'm getting excited about right now. And, I want to see it come up in the numbers, but at all-time highs, if you give the market a chance to speculate, I think it will. And to me, maybe I'm wrong. Maybe it was speculating about these private things or perps or whatever. But what changed me and what was like, wow, that's huge, is a possible, can Robinhood come in and really take brokerage space in the European Union and around the world?
Yeah, like I think what's really interesting is there's not been many companies that have been able to come into Canada from the States and, set up a lot of financial services. There have been some, but with this new tokenization, they just acquired a company called WonderFi. I wonder if that's how they're going to end up and entering brokerage even here in Canada. Like, are they just going to say, hey, everything's going to be done through blockchain, and that sort of alleviates some regulatory pressures in a way, which who knows?
Yeah, and I mean, in Europe, you guys. I think that was the most interesting part of the event, besides tokenization of assets, is figuring out a way to kind of expedite a path to not just offering crypto speculation in Europe, but offering access to several hundred, soon to be 1,000 U.S. listed companies with no commissions, which I know in the USA that's kind of it's kind of table stakes in a given at this point. You're either paying virtually no commission or no commission. But I mean, if you look at our European friends offering screenshots across social media, their commissions are still pretty hefty. So anything that Robinhood can do to figure out how to eliminate that, I think the value proposition in Europe for doing that is significantly more appealing and compelling than it is in the USA. So just immediate differentiation that they're able to drive there. I know that they added perpetual futures as well for crypto, which they walked us through. fewer clicks, fewer pages to conversion, which, I mean, just like for a PayPal or a Shopify, when you're running a marketplace or an e-commerce marketplace, if you make people do less work, they'll convert at a higher rate, or they'll, in Robinhood's case, trade at a higher rate, and you'll make more money on their transaction volume. But I think it's just finding creative ways to turbocharge introducing products that they would have had to do in a more calculated, slow manner had they not gone this route. I think is exciting when they're lumping in that commission-free, again, value proposition that is much more differentiated in Europe than it is in the USA.
I think to be very specific, there's a 10 basis point take on the tokenization, like the
tax conversion, right?
Right. So they do make a little bit of money on it, and on the perpetual futures, I think it's a 2 basis point take.
Yeah. So do you think in the USA, whenever this comes out, then that FX fee won't be there, because it'll just be dollars to dollars. So
sure.
So yeah, very, very low fee product that I think a lot more people in Europe don't have access to a substitute like they do in the US. So
yeah. No, it's a really interesting product there. But then there was some news from OpenAI that stirred up a lot of conversation, saying, hey, we don't actually know what these tokens are. We're not affiliated with Robinhood. Obviously, we know now, past that comment, that Robinhood comms team, Vlad, a whole bunch of people, even Elon Musk came out to say a few things about it. But
I did not see what Elon said. What did Elon say?
I didn't see.
He said to OpenAI, saying this is not our equity. I think Elon said, "What equity? Like your equity is fake." He was kind of.
So he didn't say anything.
Okay.
Yeah, he was just tearing at the fact of OpenAI's part, but it does bring into account, like, SpaceX was a part of one of the offerings as well. Elon and their team didn't make a peep about it. Yeah. So.
And I think the controversy, we were talking about this a little bit before the episode, but some of the other companies that have done this, offered access to private companies, have done so from purchasing stakes. And Tanner was talking about this before the episode, so I'm just basically repeating what he said. But purchasing stakes and offering them to their shareholders through private placements, and through smaller private placements than you'd have to be if there was that typical accreditation requirement where you have to have a certain amount of net worth to even access this. And how Robinhood's doing it is they're basically emulating exposure to OpenAI and SpaceX through a special purpose vehicle. And I frankly did a few minutes of research while we were starting the episode, so can talk about it a little more intelligently. But they're basically mimicking exposure to OpenAI, which I understand how OpenAI wants to make it very clear how, yeah, this is not our equity. This does not represent an actual direct stake in OpenAI. But I don't know why that. I don't know why that matters a lot. If they've created an asset or something that can mimic or emulate what OpenAI would track in terms of value. If they've done that one for one with another perfectly correlated asset, I don't understand why that would be an issue for anyone. But I do fully understand why OpenAI, for legal purposes and for compliance purposes, came out and said this doesn't actually represent direct ownership in our state in our company. But I mean, if it walks like a duck and it acts like a duck, it's probably a duck. And in this case, Robinhood basically giving a 1-for-1 correlated exposure to this private company, to me is the same thing. And I think that's some noise and not super urgent for shareholders.
You know what I'm intrigued on, though, as like we're getting to that point. We could have $100 billion company with $500 billion of ownership behind it or something like that. Like in extreme scenarios where we're like, this person owns a tokenized piece of this, and like everything's tracking bound it. So like, I don't know. It is a little bit of a weird scenario from that perspective. And I wonder if OpenAI is thinking those are people who might have bought our shares as opposed to something else. And what happens if they go public? But I guess it just turns into the other token stock. Sorry.
Even if you're not, no, I'm interrupting you. But at some point, even if you're not offering direct, tangible access to OpenAI shares through an indirect outlet or two indirect outlets, it has to be connected to a finite piece of that company. Otherwise, there is no correlation and there is no perfect tracking of OpenAI's value in private markets. So I don't know how the 5-to-1 thing would happen, but I do think this is pretty new and pretty creative and in a little gray area, but to me doesn't look like anything that's going to be super concerning for them, especially. I mean, they got through the payment for order flow legislation and the GameStop liquidity stuff. This seems like minor leagues compared to those two things.
I want to ask the question here. I was actually I got asked this question recently about the last event, the gold one, and they did that money transfer, how you can actually order money to you in physically. And sure, maybe they'll do that, but I don't think that was ever actually a thing. I think that was hey, we have this event going on. Let's use this to get everyone to talk about it. And then here's what we also did that's real. I wonder if that's what these tokens are. If these are the pitch to get everyone more and more talking about this, and it's something they know they can do, but is it going to actually work? Is it going to get the regulation? Are they going to be able to bring it through the US? We'll see. That's where, like, I did not take that much from that private company thing. I thought it was more gimmicky than, hey, we're going to see this right now. But I could be wrong.
Yeah. So a few things. One of the larger fintechs here in Canada, Wealthsimple, actually just opened up the availability for cash delivery in specific cities. So they took a page out of Robinhood's book. So they're trying to make that a legit feature.
If you need to go purchase that illicit drug at midnight on a Wednesday evening, you know exactly who to turn to fund that transaction.
Right. Sure. But I think the thing that is stirring me up so much about these private market shares is a couple things. So one, the giveaway was a little bit interesting because they only had so much supply, right? So they just said, hey, we're going to give this away and people will have those shares, whatever. If they end up going public, those private shares can go public. It's just a matter of how easily they are to sell. So I have no problem with that at all. But for future deals or more people wanting to buy into OpenAI, where are you going to find those shares? Because you either have to find another person with a tokenized share to purchase from, or you need Robinhood to continuously go out and try to acquire more shares from OpenAI, which might prove hard.
Yeah.
What were you gonna say, Brad?
I was making sound effects to support your idea in your but yeah.
So if there is such little liquidity, that seems weird to find a buyer and a seller and meet them in the middle with such few customers on Robinhood's side at the moment. And I think that's also why they want to create like a Robinhood chain in a way, so then they can connect multiple brokers, increase liquidity, stuff like this. But then Vlad came out and said, we're hearing a lot of interest from private companies that want to come out and also do this similar deal. And there's been a lot of things about like companies potentially SPACing onto markets to not see the same level of scrutiny to IPO onto markets. This seems like an advanced version of that. No auditing. So just selling private shares to go to Robinhood seems like.
So there is one thing I will say, there is crowdfunding, which is, you can go through the regulation or whatever it is, Reg CFA, whatever, I don't know what it is. It's clearly not CFA. But like Start Engine, you can go public. There are some filing, not public. You can like get private investors through a crowdfunding thing. And like you have to do some filings. So I'd imagine this wouldn't be something that would come to the US first. And I'd imagine my best guess is they would go down that crowdfunding route. And it would be basically that.
Yeah, I just and just adding something to what Tanner was talking about with how it's super liquid and how do you control supply and demand? How do you control these transactions without creating artificially manufactured price spikes up and down when you're going through these transactions with so little counterparty action? I mean, I feel like every single time there's a transaction taking place, that would have a material impact on the price. So I'm not sure how that would really work. Yeah.
My honest thought,
the public CEO. Oh, sorry, Evan. I was just going to say really quick, because the public CEO came out and wrote this whole like almost blog about it and was talking about how, if the difference between the buyers and the sellers is so wide, you can essentially like boost OpenAI's valuation to like $3 trillion in a single transaction. And then it goes back down to 500 billion, so it is a little weird.
Yeah, and I think in terms of tokenize in the physical cash thing, I think that's super gimmicky and not at all. There's no scalability. But what isn't interesting, and this will get us into kind of a fun subjective debate that I at least I think will be fun, is that they hinted at this directly going into real estate and rare baseball cards and fine art and things like that, and securitizing assets to offer partial ownership. And there was Masterworks on the art side, there was Lex on the real estate side in 2021 when this was all kind of being experimented with and formed, but they were all point solutions. They were all disparate point solutions that didn't really communicate or talk to each other or let you pool assets or let you track anything in one unified manner. And if Robinhood does all of this in one place, I do see how that could be additive to them. But then this is the fun debate part. If you're offering access to things before they are publicly available, you're inherently, like you said, inviting sidestepping of public disclosures. You're allowing the public to get their hands on private companies that are more speculative and more risky and earlier on. So it's this balance of the pro is, yeah, you're democratizing access to financial assets. But then the con is how democratized should access be? Because, and I don't want to sound smug or anything, but there are a lot of people who probably shouldn't be investing in hyper speculative private companies just because they have full-time jobs and they have lives and they have other things to do besides obsessively tracking the performance of this company day in and day out. So I do, and I am a little, I sometimes in these arguments I'm boring and conservative and boomery, and I understand that, but I do like the IPO disclosure process, and I do like how hard it is for companies to go public. I think you could, around the fringes, change a few things to prevent companies from being motivated to have $100 billion valuations before they enter public markets, and maybe cut some of the red tape that's so cumbersome. But I do get super worried when we cut all of the red tape and say, all right, free for all. You guys can buy fractional shares in this Picasso. You guys can buy fractional shares in Figma 3 years ago before it announced their IPO and before we knew it was going to be a successful exit for private investors. So it is that balancing act of access versus access, like access better and that's a weird sentence, but access ubiquity is really good in a sense, but then it allows people to enjoy that access, take advantage of it, maybe without doing the homework that is necessary to responsibly pursue exposure to these hyper speculative asset classes.
There is some level here that I actually do sympathize with. It's like, okay, but we do let people buy fart coin. So where's the middle ground here? At least you're buying some level of a real company.
And we're heading towards people being able to trade markets at 2 a.m. on a Sunday morning too. So these are arguments that I'm losing. And I do think I'm in the minority when I say all of this. I think it's important to talk about the flip side of access for everyone and democratization being a uniformly positive thing, because I do think there's a dark side to it. So maybe just democratization with some guardrails would be perfect.
Evan?
Yeah, I think I'm going to go back to my earlier point that I don't know. I think this is more a vision of something that we know Vlad really wants to do. That my fan's blowing right at me. Let me go turn that off.
You sound good, man.
Yeah, you're good.
You sound confident. You sound sure of yourself.
This is a vision. This is a vision that Vlad has played for us for the future and everything in there. And I see this more as that of this is the direction where we're going. I think there's a reason that some stuff was said, hey, might come to the U.S. soon, might not. But I don't think there was any mention of these private things coming to the U.S. anytime soon. And I think that's for a reason. So, I think it's a good conversation. I agree with Brad on, disclosures and stuff. And, I hear the argument about Farcoin, but the crypto people are their own little world. And, the answer is probably somewhere in the middle between what it is right now and what crypto people want, which is that kind of pullback.
Yeah. Yeah. And Farcoin, touche, like kind of.
Can you buy a Farcoin on Robinhood? Yeah, you can. What about Coinbase?
I didn't hear you. I was too busy making a fart pun. Sorry, go ahead.
Can you buy this on like the US platforms?
The coin things? I have no idea.
I know people like VPNs and can do their stuff. Let's see, Farcoin.
Yeah, I don't think that they're available for Robinhood, but Coinbase is pretty interesting. They're trying to open up access to like entire like decentralized exchange platforms. So you'll be able to buy essentially any single coin that you would like. But yeah, and then that's another player, right? Like once we start opening stock tokens, there's platforms like this built on Solana, on Ethereum, but potentially on Base as well. And like we saw last time, Coinbase is trying to get approval for this. They're open up in 100+ countries. This is what I think is really exciting, is you're essentially taking Robinhood, excusing the private side. I think the public side is actually an area that is truly tackleable, has liquidity. You know, your shares will be held 1-to-1 by Robinhood. The dividend is still yours, all those sort of questions. In that case, we're taking essentially what is from one country and bringing it over to 40+ countries immediately.
Tanner, can I ask you something? What does the brokerage landscape look like in Canada? Do you like have a lot of brokers there charging zero for commission? Like, can you just go buy stock without commissions?
You can, but you're talking about very, very select fintech names.
And are they just bad?
Simple, for example.
Okay, well, I've heard people like Wealthsimple.
Yep. I'm a big fan of Wealthsimple. They don't offer commission on stock trading, but we also don't have payment for order flow. So they're just kind of being nice guys. No, but obviously there's other ways that they monetize as well. They have a full banking platform and everything like this. And the options here, like stuff like that, are much more expensive than what you'd find in the States. I think I pay 75 cents per contract. Canadian cents, though. So that's like, I don't know, 10, 5, something like that.
Monopoly money doesn't even count.
Yeah. You got to pay a fake rate to get into US dollars. But once I'm there, then I'm holding real dollars. But yeah, so we have a couple players, but still the large banks, the big brokerages are still, some are still at $10 per buy, $10 per sell. So
that's brutal. Yeah, we're spoiled here for sure. Hopefully you guys will be spoiled too in the near future.
Yeah, hopefully. But that could be through tokenization. I mean, truly.
Yeah. And I mean, I think Coinbase has more to gain from this whole wave than Robinhood does, because I mean, Robinhood's they will get into these new asset classes, but they're going to cannibalize some of their core equity trading business if this expands everywhere. And for Coinbase, this is all additive. This is all incremental for them. If they're giving people, like, this is their entrance into equity exposure. So allowing people to access that on their platform, where again, you're getting the passionate crypto people and then cross-selling them equity exposure. I think that's extremely exciting for them specifically. Robinhood too, but Coinbase, I think, definitely.
Do we want to talk about a little bit of Amazon?
Sure.
Amazon just updated 2 new stories all in one, essentially a new AI routing tool. I think they called it Deep Fleet. And then they also announced that they just created their 1 millionth robot, which is essentially overtaking their existing, employee base, if you include the drivers and then their contracted out drivers as well. Where's this going? Are they going to have, 10 million, 30 million robots in the future with a smaller and smaller workforce? Obviously, Andy Jassy said they're going to be hiring more for AI and robotics, but also probably trimming back on other areas that are just completely solvable by some of these new processes. So what does Amazon look like into the future?
I mean, it's just that the exciting thing about Amazon is they are the margin puppet master. They have such a gigantic base of low margin revenue and such a dominant share and customer service lead versus everyone else in their markets, that they can decide when they want to earn 20 more cents a share in a quarter. They can decide when they want to start flexing the profit muscle and showing people bottom line progress. They can decide when it's time to spend like drunken pirates on data centers and forget about free cash flow for a couple of years, because that's what the responsible thing is to do, because they've been so successful and because the balance sheet looks so amazing. But I'm rambling a little bit. The important thing is that there are still tens of thousands of people working in those warehouses doing extremely mundane and tedious tasks, sorting, picking, packing, things that robots are very good at. They're very good at repetitive, tedious things, just like computers are. And so when you when you create, not only when you create Gen AI, but now that we're getting to a point where Gen AI workloads are getting cheaper and cheaper and cheaper, and these algorithms and models are getting more productive and more efficient to train, it just unlocks endless possibilities for them to be replacing the extra tedious, extra mundane tasks in their warehouses that people maybe aren't doing perfectly, with robots that can do so perfectly, that don't get tired, that don't take lunch breaks, that don't do any of these, that don't mess up, or they do mess up, but just like Waymo and Tesla autonomous vehicles versus human drivers, they mess up a lot less frequently. So I don't think they're going to be super aggressive or do this very urgently. I think it's going to be a several year process where they slowly are supplanting incremental hiring needs with robots. So maybe to not have that shock where they're firing a just massive chunk of people, because I think that wouldn't be really good in terms of PR. It wouldn't be good for the economy. And I mean, when they're 40% of US e-commerce, consumer weakness that they inflict does have some kind of impact on them as well. But there's so much they can do, not to mention the fact that Zoox, their autonomous driving arm, is coming. So to envision this future where they don't even need a really big consumer facing robotaxi business to make that investment worthwhile, if they have this fleet of autonomous, I'm sure Rivian cars that are powered by Zoox, where they can just have robots fielding inbound inventory, putting it in the perfect place in the warehouse, packing it perfectly, and boxing it up with other orders that can be batched and shipped to similar places, and then giving it to these Zoox autonomous vehicles. There is so much operating leverage to be enjoyed from that equation and from that workflow that I just laid out versus what they're currently doing, that I just think that the sky's the limit for how big of a piece of their company robotics becomes. The discussion then becomes like, what does that do to unemployment rate? And we've talked about that a few times over the last month or two. But again, in what we talked about then, which is what I'll say now, is I don't even think we can really fathom the jobs that Gen AI is going to create for people. We're freaking out about what it's going to displace, but just like the .com bubble created whole new classes of need for talent, I think Gen AI is going to do the same thing. Prompt engineers, whatever it is. But I'm kind of rambling now. What you asked me was, is there a lot of opportunity left for Amazon robotics? And the answer is a screaming yes.
Maybe if I would ask you that question, you would have just said a screaming yes. I would have been pissed. So I'm happy that you rambled a little bit.
Maybe I can balance not talking about random things for 10 minutes and it's like somewhere in the middle. We'll find a middle ground.
Evan,
Listen,
AI robotics, is Amazon potentially the number one pick here? I believe more and more that it actually might be, and that there's so much margin expansion that could happen here. What's going on?
It is a loser mentality to be like, yeah, I'm so worried about what this great innovation is going to do, like so fearful about it. I feel like it's a winner's mentality to be like, okay, let's wait, see how we can actually benefit off of this. How can we put myself in the right area? So, I don't think it's worth spending that much time on like, the fears of what it is. I think it's more of how can we mitigate them and how can we do that? So, and whenever that's someone's argument and it's like that's what they're leaning on and they're talking about the jobs this is going to get rid of and all that stuff, I don't think that person really does well in a time when innovation is going really quickly. And I think that's one of the things that like we talk about on here, and we're just talking about so many different areas about innovation, and maybe there's one or two techs underlying them. I think AI is too broad of a term, but AI, robotics, there's a lot of these. Even just with healthcare and stuff like that, there's a lot of stuff moving on at the same time. And I don't think that's a winning mentality in an area of innovation. I think there's a lot of opportunity with Amazon and for robotics. I think it's interesting that it took them a long time to get from 750K robots to 1 million. You would have maybe expected on a ramp curve for this to have happened last year. So I wonder if there's problems going on there. We don't have too many updates about how the Amazon robotics program is going. There's a lot of AI startups. Tesla wants to tell you humanoid robots are close. I don't know. We'll see. I saw a video last week of a bunch of robots in China playing soccer, and half of them had to be stretchered off. That's that, and half might be the right side of it.
I think we need a graph where you can see their posted robotic milestones over time.
Was this a Evan promo? Because I made this chart myself.
Did you?
I did. Let's present
And where can I find that?
You're always from yourself.
This one, I don't remember exactly where I collected all this data from. I basically had it, and then I updated this one for now. Look at these awesome people again. Brad, we're closer.
It looks like a terrible ramp, actually. Yeah, that looks bad. I'm being sarcastic, by the way.
It's good, but like I would have, if you look at the years, 2022, 2023, this is 2025, not 2024. So the years are skipping a little. Gotcha. These are just Chart when crime. They're updating us.
Chart crime
a little bit. Yeah. This is from 2013. This is just whenever they're giving us updates. Yeah. So yeah, I don't know. I think it's good. I think it's going in the right direction. My thought process is ChatGPT was this AI moment for everyone. I think we need a real world AI moment. My guess is it's going to be FSD or something like that. These cars are pretty much there, and I don't know what that moment is. I don't know if it's Waymo. Maybe it's Waymo. Who knows? But I think that's pretty close. And then you can start to speculate on how close Optimus will actually be. I feel like it's more of a 5-year thing, and Amazon's going that way. They'll probably be a leader on it.
You're right though. I mean, Gen AI innovation so far is let's make drug discovery faster. Let's make advertising targeting better. Let's make coding more automated. It's not, besides ChatGPT and this new way we're interfacing with search, it hasn't been a let's do this entirely new thing with Gen AI and create whole new possibilities and entirely new workflows and ways of being productive. It's been let's do everything we were doing for the last 50 years and all the machine learning that we were already using and all of these things we were doing. And let's just turbocharge that and make it even better. So I think this shift from Gen AI to agentic AI, which really just means multi-step tasks and reasoning models that can think about the best way to think through those tasks. That's a big step in the right direction for actually forming new possibilities of what Gen AI can allow us to do. But right now, all the monetization has been NVIDIA selling GPUs, Broadcom selling their connectivity equipment and their ASICs, and then the big public cloud vendors, Azure, AWS, Google Cloud, are renting this compute capacity to everyone else, and then everyone else using it in their existing businesses, and then sort of thinking about and pontificating on how do we create newness and how do we really turbocharge this ROI from all this that we're spending. And I don't think we've gotten to that point in the innovation wave just yet.
The more and more I look, and if we can go back to OpenAI really quick, I think that this might be one of the largest companies that we'll ever see, especially the fastest to get there. But I'm more of a believer that this 300 billion or whatever valuation is going to surpass 1 trillion, and they'll probably need to be public to end up reaching those kind of heights. But I do think it's coming because you just see the unlocks and more use cases and them not wanting to slow down, aside from Meta potentially poaching some of their top researchers. But it's just incredible. And the infrastructure that needs to be built out for this is still not finished, in my opinion. Little push towards the Oracle OpenAI story that ended up coming out this week. Maybe Brad, you want to talk on that? If you can throw in NVIDIA's name a couple times, that'd be great. But yeah,
just the expansion of the Stargate partnership.
4.5 gigawatts.
Yeah, Oracle just really, to me, feels like the one that got away, just because for the last year and a half, they've just been talking about our remaining performance obligations, our bookings are growing at a triple-digit clip, and we're signing deals with every single hypercloud vendor, and we're integrating ourselves as the multi-cloud data layer in this entire Gen AI explosion. And they've really morphed from this somewhat legacy, maybe past their prime on-prem infrastructure play, to a company that's really figured out a way to design data centers in a way, and they call it modular design, and basically building Lego blocks of servers that one layout, one design, extremely scalable, extremely cheap. Their data products are directly integrated, so data processing and transfer costs, they say, and I mean, based on their success, it looks like they're right, are cheaper than with other vendors. So they've just been able to form this niche. I know you didn't talk about Oracle, or it was about Stargate, but I really think Larry Ellison deserves some credit here. And his wife is currently bankrolling University of Michigan's football program. So shout out to her for that.
Who is this? Larry Ellison?
Larry Ellison's wife.
Shout out to Oracle.
I knew Evan was gonna love that. But the way they figured out how to go where the public cloud vendors aren't willing to go, to build not only these gigantic 2 gigawatt data centers, but these tiny data center regions for companies that they can actually do profitably, because they have the singular design of building data centers in that modular Lego-like fashion that allows them to go as small or large as they need to, which public cloud vendors aren't really willing to do at this point in time. So they have absolutely killed the Gen AI infrastructure boom opportunity. They have turned themselves back into a Wall Street darling. They have turned themselves back into a double-digit grower. I have nothing but positive things to say about Oracle. And I mean, the Stargate project, all the sovereign AI deals they're signing, all the CapEx you're seeing from Meta and from Tesla, a lot of that's going to Oracle. So they have just, between Oracle database services they offer, between Oracle cloud infrastructure and the strategic apps that they have, NetSuite and things like that, they've created this suite of software that is resonating in such a deep and effective manner across the entire industry, that I think comeback story of this technological boom has been Oracle. And I've been covering their quarters for 2 years and I've been seeing that and didn't buy any shares. So I'm the doofus who saw that happening and didn't make any money from it. So
yeah, that's how I feel about Meta as well. It's like I still should pull the trigger. I don't know why I haven't, but you didn't say Nvidia once, so that was disappointing. But sorry, Evan, go ahead.
I saw Needham today. They upgraded Meta from sell to hold. So they not only weren't in Meta, they had it as a sell rating this whole time.
Yeah, that's always a tough position to be in.
Outside there is a very lonely position, because I mean, for outside of a select few companies where everyone has a sell rating, you're usually in the minority and you're usually arguing against a much larger group of people. And when bears are wrong, they get made fun of way more than when bulls are wrong. So it's just a tough job. So yeah,
it's also a job that no one really needs to, like. I don't know. Maybe people do need short reports from time to time, but I don't know. I think markets go up so much more than they go down. Why try to be the person that is doing the much harder job? I never understood that.
They do find fraud. I mean, they did Nicola, the pushing the car down the hill demo. I don't remember. I think it was Muddy Waters. Maybe it was.
Excuse me. He got acquitted, or sorry, pardoned. We don't talk about that anymore now. Disgusting. How could you bring that up?
How did he get pardoned? I don't really. And I'm sure now he's.
How crazy is that? The explanation after on why was ridiculous too. But we'll let it
was like a couple people said he was a good guy or something.
Yeah, I just maybe he I don't know, maybe he did something or spent some money on someone or bought some kind of card that's gold colored or something like that. I don't know, but yeah, good for him. I guess that's sometimes you can commit fraud and be completely forgiven, but let's not test that. Let's not test that theory.
When Trump made the comments about maybe deporting Musk, I saw like Uno reverse card, but it was like Musk holding the gold card. It was like, I could do this all day.
Yeah, Elon Musk is not getting deported. The fact that anyone read that and thought anything but whatever. Like it's a fun soundbite and they're feuding. But I would like to have a poly market. I would like to have a poly market made of, will Elon Musk get deported, and I will slam the no, he will not get deported.
Do you guys have you guys been investing long enough where, because I don't remember when it happened. I don't remember if this was 2015 or but when Larry Ellison and Jeff Bezos used to go back and forth the way like Elon and Sam did, like they were like really feuding with each other.
No, I really got started in like 2017. So maybe that was before.
It must have been earlier than that, but they were because obviously there was a big cloud boom, and so Larry Ellison is a very outspoken person and was talking all sorts of crap about how even Amazon.com was running on Oracle and all sorts of fun stuff. Yeah,
they've always been kind of late to embrace tech, or not always, but in the few key technological changes we've had, they've been late to embrace it. And on cloud, that kind of cost them dearly. But on Gen AI, they rushed to a point, or they caught up to a point where I guess they've kind of gotten away with being the late entrant into the infrastructure space here.
Any other topics that we want to cover today?
You guys want to do Tesla deliveries real quick?
Sure.
I
think you have that on screen.
Negative 14% growth. It missed expectations, but it beat the whisper number on Wall Street. So there's an expectation number, and then there's an insider expectation number for some weird reason, because our sector and industry loves to make people feel feel like they don't know what's going on. But that's why we're here to make you more confident that you do know what's going on. But so anyway, continued decline in deliveries for Tesla. It was fully expected, better than feared. You saw the company stock kind of exhale following that, because I think there were a lot of people were holding their breath about how bad is this going to look. I think 2024 deliveries fell year over year, so they're comping off of negative growth, and they're continuing to deliver negative growth. So I don't think you can call that good. I don't think anyone can call that good. I know the Model Y refresh or overhaul maybe still be disrupting things a little bit, but I don't think that's the main reason for this. But at the same time, you see people completely looking through this and forgiving it. And that is because there are two very important projects and objectives that one of them showing decent signs of progress in robo-taxis and launching throughout Austin. Then testing is ongoing there, and we'll see how quickly that scales. And then Optimus that everyone is excited about. And I mean, you have, and it's understandable why people are excited about it. I mean, Elon Musk has built the only giant scaled profitable electric vehicle company in the United States. And now he's telling people after building that credibility and delivering on that gigantic obstacle and mission and objective, whatever you want to call it, is saying that Optimus is going to be bigger than any product or company that's ever existed by several factors. Robotaxi is going to be a several $1 trillion opportunity. So people are I think willing to almost treat this biotechy and how we don't care about the core business. We don't care what financials currently look like. We don't care how long you need to get this ready, because we know if you're able to pull this off, if you are able to have a market share lead on humanoid robots or on autonomous vehicles, which to be determined if that happens, then this stretch of 2-3 kind of poor years for their core business won't matter, because it won't be their core business anymore. I think that was my kind of takeaway for why it was maybe not or maybe shrugged off and forgiven immediately by shareholders. I think everyone is focused on the future for this company, as it seems like they have been for a few decades now. But no one really cares about how the EV business looks at this point. To me, that doesn't make a ton of sense, just because nothing else that this company is working on right now is materially contributing to financial results. And that is, but besides energy generation and storage, which is rocking it for them, which is absolutely killing it and deserves a lot of credit. But aside from that, there's nothing really driving near-term growth on the top or bottom line. And I think kind of assuming or banking on the fact that robotaxis or humanoid robots will take that eventually is very high risk and very high reward. So if you're willing to do that significant amount of speculating, I do get why you're looking through kind of continued poor results in the auto business. And I do get why you don't care about it that much. That's not my opinion. That's not how I think, but I know that's how the other camp thinks. And I mean, if you look at Tesla's stock chart over the last 15 years, they have been right to think that way. So maybe they'll keep being right.
I just don't quite understand how people model out how large robotaxi is going to be. I get how Kathy does it. I don't agree with it. But like, is this a $900 billion annual revenue market by 2029? I don't see how that is remotely possible.
Yeah, there's a long period of product market fit coming for this hardware. There's a long, just like Gen AI software, we need to figure out exactly what to do with all of this, exactly how to do it. I think it'll be more intuitive because they'll be shaped like humans, and we'll try to just emulate manual.
I'm just talking about the robotaxi part.
Oh, robotaxi. Yeah, and same thing. There is a long period of scaling and clearing regulatory hurdles and getting to a point where this can be a large driver for financial success, even for Waymo. I mean, Waymo is burning an a ridiculous amount of money right now, which is fine because it's attached to Google and they have a ridiculous amount of money to burn. But we're not close to this being a 20, 30% EBIT margin business that's scaling nicely and contributing to a company's core business. I don't think we're within 2 years of that, 3 years of that. We have several more years to go of this scaling and creating economies of scale needed to actually drive profit. Uber, I think, will accelerate that process for everyone, but it will take time, a lot of time. So
wasn't there some large development story about Waymo this week about them scaling up their vehicle production even quicker?
Last week, maybe.
I remember some deal about them like getting money from a backer in like China or like some international one too. That came
maybe
out
that was it.
Let me look.
But I think that when you look at the opportunity here, I think transportation is kind of what's being disrupted here. And when you're looking at the opportunity,
the hard cutting research from Evan.
Yeah, listen, go in and watch it. But the way we move around is changing. Car companies, in the past have, their edges have been how great they can make their engine. And it feels like we're going away from that direction. And it feels like what it's going to be is maybe luxurious interior, some tech software advantage, maybe some consolidation here. But, I am kind of serious in what I said is I am looking at the size of the transportation industry, what cars are in it. And if you really think that's going to be disrupted, like if there are self-driving cars, I really don't see how you just go out and buy especially if the self-driving cars are, and I think this is where Teslas are different. If Waymo's cost $110,000, $115,000, Tesla is selling you the dream that you can get a robo-taxi for $35K. And in that scenario, some of these other cars, I just don't see how it ends up working out. So
I think Waymo's planning on getting to 60 on their next model, and then it'll just keep falling from there. So.
Yeah, I wasn't laughing at the fact that I think that the TAM is transportation. I think that that's how every single person is modeling it, is how large the financial industry or the transportation industry is. But like, I haven't seen a lot of models that get above 500 billion for that. Like in today, if you include public transportation, taxi, ride share, everything.
Yeah.
Globally, it's hard to get above 500-600 billion.
Yeah, I think rideshare is 150 billion, something like that globally in terms of revenue. But this is relevant for basically Uber's entire product suite. So it's just moving things and moving, not only moving people but moving things. I think Amazon plus Uber. There are everything that they do in terms of logistics that AVs I think can be very relevant. So it is a really big market. I just think it's gonna take time to a point where people think to themselves, "Oh, this wasn't real and this was BS." And then all of a sudden, you'll look up and be thinking to yourself, "Oh man, this is more than half the market now, and this is a daily part of my life, and this is ubiquitous." And yeah, so slowly and then all at once, I think is how to think about this.
I think we're going to see a lot more streets that look like this with Teslas and other models in the mix, but I do think there will be very many self-driving vehicles on the roads. I've got no question about that. I just don't know how much that actually makes for the companies involved. And
my question is what companies are going to be the ones doing them? Do you think it's going to be the traditional car makers?
Yes.
Yeah, I think they'll partner with Pony AI and some of these other software layer companies and figure it out. That I think they'll provide the global manufacturing scale. Other younger, newer, more capable companies will provide the software arm and they will partner. That's what Ford has come out and said they were planning on doing.
I feel like a couple years ago, these companies, Fords, would have been buying these AI companies, and now they're going to partner with them.
It's so early for them to pick a winner. And if they do pick a winner, they are now responsible for making sure that company continues to be a winner while there's all these moving pieces and so many new entrants. And not to be disrespectful to great American companies, but I don't know how promising of an option Ford is to guide a disruptor for 5-10 years into something that can help them. So I think they are intentionally going slowly because they know what they do well and they know what they don't do well. And they just want it to be more obvious who the winners are going to be before they pick one.
Yeah. No, I'm a very big believer that this is the future. I find that if Elon was to stay out of politics and focus on what the future of his companies look like, I'm more willing to give that company a premium. And then the more he steps into the political light and we start seeing more tweets from Trump that say go back to South Africa or what, that he's going to deport him. I find it harder to make the valuation of today seem worth it whenever there's other companies like I mean, cash versus Tesla. I pick Tesla. Tesla versus other great options in the market. Like, I really like Nvidia, and I think that the Keyman risk in the political landscape is done much better in that case, with still an unbelievable upside.
Yeah, I remember you heard Jensen's their last earnings call. He was so good at massaging the egos of the people who he needed to, and then offering some sharp criticism between all of the compliment. He just knew how to whoever needs to feel good about themselves. He was good at making that happen. And I mean, Nvidia trades for a mid-30s earnings multiple. You're paying 150 times forward for Tesla. So that, I think that is the clearest indication of people are looking ahead into what Tesla can be to value the company and not focus on what it currently is.
Yeah, no, I agree.
Maybe that's the right decision. And I don't short companies. I don't bet against them. And my newsletter does better when really popular companies have their stock prices going up. So I hope Tesla continues to absolutely kill it for everyone. We're on the same team. I don't want to make it seem like I'm rooting against anyone.
Evan, any last thoughts before we wrap today?
Merry 4th of July for everyone in the U.S. Happy Canada Day to you stupid people in Canada. No, I'm kidding. I'm kidding. I appreciate you all. We appreciate everyone. Wherever you're watching this, you should give the video a like, follow, subscribe. Shout out Brad and Tanner for doing this. Ads are on the screen. Yeah, no, listen, I think it's fair. I tend to think Waymo, there's a place for Waymo, a lot of companies in this autonomous driving space. I just think my underlying is it's here. And it's now. And I don't know if Tesla, if you're giving me the Mag 7 to pick through, Tesla's not going to be my first one, is what I'll say as well.
Apple would be, though.
No, it wouldn't. Apple would be in the middle.
Just wanted you to admit it.
Evan said Apple was at all-time highs at the beginning of the show, and I would just like to point out that it's 42 points off of all-time highs right now.
Getting close. Yeah, we're on our way back to all-time highs. Watch out. I think Meta would be first, probably.
If it gets there, then we're having a whole episode of you just laughing in our faces. For that. That's what I want. That's what I want to happen.
I think that's what deserves to happen.
Absolutely.
All right.
I don't know. I get excited about Google at the price, but I don't. It's Meta, Nvidia, and I don't know what the third one would be at the top three.
Well, we will take.
Can I ask one more question?
Yeah, absolutely.
Before we end it, I want to rapid fire because I asked this in another place. How many rate cuts do you guys think we get in 2025?
Two.
That's what I said too. Okay. All right. I'm gonna write it down.
Morgan Stanley says 6 in 2026. That would be wild.
I know, but that's basically them saying we expect a new Fed chair is going to cut.
That's fair. That's totally fair. That's gonna be a messy transition. We'll see.
Before today, though, they were talking rate cuts like it was going to be 3. Like a lot of people thought 3. That's where the markets were starting to maybe go towards them, but that kind of came out pretty quickly.
All right. Well, let's go chill on a beach, and I'm sure our readers all want to be, or listeners all want to be doing right now, and we will chat with you guys in a week.
Nixon 6.
Thank you, ladies and gentlemen. Bye for now.